All right, I think we're live. I think we're live again. It's been a while since I last was live, but it's needed. It's a big day today, guys. Come on. We're going to be watching the press conference live. Let me. All right. Let's see. What is it again? Like a federalreserve.gov. So usually there's some sort of a. Usually we can do something like this. Okay, wait. Is there a live stream somewhere that we can actually watch on YouTube? I think so. I mean, let's just check it out. All right. So let me know if the audio is alright. I think it's good. I mean, the audio isn't different from my videos, but so it should be good. But all right, we'll do the Federal Reserve press conference, and then usually it does pop up. Here it is, the FOMC press conference, September the 20th. Will start in a moment. I will actually turn on the sound, but let me fix the subtitles already. All right, options, window color black, font size big. Yeah, I think that's good. Then we'll press the live. We'll turn the sound off for now. And then we'll revisit this when it actually starts. It starts in 12 minutes, I think. So we still have 12 minutes to spend together. Isn't it great on this Wednesday evening? I hope we're all doing great. We're seeing quite a lot of volatility throughout the markets. TRB is doing some crazy stuff still. For the rest, I mean, storage is still doing pretty fine. FitFi is showing some bullish momentum. GMX is going for a bullish breakout. GMX is definitely a crypto you should watch. It's trying to get a major bullish breakout right here out of this level, which would be a good indication of a long position, which I will probably take. But yeah, how is everybody? What's everybody expecting from Bitcoin and the markets today? Personally, but that's pretty stubborn of me, but I've been expecting Bitcoin to be bearish for the last... well, what is it, for the last week or so? So it has almost only been bullish since then. So maybe that's a good indication. I've been thinking Bitcoin was going to drop down lower ever since like 26,600. So maybe that's a good indication that instead of that, we'll actually break out above our main resistance at 27,500, and that will rally up towards 28,500, and we'll see from there. It's Overall, the expectation in my eyes is bearish, but that's also me. I mean, it's a bit of a personal analysis. Not that much momentum in the markets right now. There's a little bit of movement from YGG here, as you can see. YGG might rally here, which is interesting. Another crypto you should take a look at because, as most or as some of you know, it has a history of pumping. So that could be interesting. My price alerts are set. If those are hit within this live stream, I will probably not be able to take a position on them. But all right. Let me quickly advertise the stream in the groups. And then we will, and then we'll do some analysis. If you want to see any altcoins analyzed, let me know, and we'll take a look at them. I can also show you some altcoins I'm looking at right now. If you're interested in that, like there are some cryptos that in my eyes could rally soon. If you want to know about those, let me know. We can also go over those, and I'll tell you what's possible with those. But just let me know. I mean, now we have a little bit of time together. We can talk about some altcoins. We can talk about some rallies, whatever you want. It's up to you. Auction was another fun crypto. We were actually waiting in a premium group. We were waiting for a breakout above 5.5 right here, which happened in very early in the morning. So maybe I could have caught it, but I wasn't behind the screens then. So I did not catch it. We are in a little bit of a position on threshold here. I'm personally in a position on prom, which is probably not going to end well, but it was it's a very small position, so it's more for fun. All right, let's take a look. What's up, Simon? Welcome to the stream. They're live on YouTube. No, right? They're here. This is the stream. It's live. He's not speaking yet. It's in 9 minutes. If it's correct, it should be correct. All right, let's take a look at some cryptos. Unify quickly. Ethereum. I cannot speak too much on Ethereum. What Ethereum does relies too much on relies way too much on what's going to happen in the next 30 minutes. All right, so I cannot really speak on that. I can speak a little bit on Unify if I can see my mouse, which I cannot right now, but that's not the biggest problem. All right, let me see. Where's my mouse? There it is. All right, so Unify in my eyes is bearish. All right, there's it could still get some sort of a second rally from here. We actually shorted in the signal group from this little spike right here. I'd say it's holding at this main resistance or main support right here at 7.5. It's possible to get some sort of a spike up towards $9 again, but I think after this last touch, it was over, and that now it's more likely to at some point of time see a breakdown towards these levels, and then down towards 5.5. But that will still take some time. And if Bitcoin is bullish after this news, it might still take weeks or maybe even months. That's possible. Solar, yes. Perpetual Protocol, I'm not too sure. Perpetual Protocol, I'm long on Perpetual Protocol. But what happened is that it broke down below 64 cents. And now it's holding 63 cents. But if we don't break above 64 cents again, it's probably going to be bearish. And then I will probably sell my position. For now, I'm still long. I did not take profits here, but yeah, we did get some decent results. Now it all depends on 64 cents. Let's take a look at Solar. Solar is interesting. We'll probably have to take a look at the open interest first. This is not great. Solar's open interest and volume is increasing, but open interest is not doing that well. Solar on its own, yeah, for me, I'm really waiting for that 30 cents and 30 and a half. See, that's the 0.618 of the move down here. So it's a significant Fibonacci level. We did break above the 0.382 Fib. So that's bullish confirmation. I would say, like, especially if the volume keeps increasing, which doesn't seem to happen right now. But if it does increase more, then something like this becomes more and more likely, where my first price target would probably be around 36 cents, I would say. I think that's fair. I think that's a fair assessment. And Anchor, yeah, Anchor, I did not take a look at it today. And ARK, we'll take a look. All right, we'll do ARK quickly, and then we'll take a look at Anchor. ARK for now, it's still the same as my last analysis. It's now trying to hold this level between 66 and 64 cents. That's really, here you can see it's hard to see, but the 382 Fib right here is key. And there's a bit of a, like it's also the 5 Fibonacci extension. There's a bit of an area right here which is providing support. And if that breaks, ARK is in trouble, all right? So if it breaks down below 63 cents, then it will probably still find support at 60 cents. But if it's not able to break above 63 cents again from 60 cents, it's probably going to drop down. And then this was the top. We'll still see some volatility. We'll still see some bullish spikes. But then 74 cents was probably the top. Anchor, like I said, haven't taken a look at it, but oh, Anchor is actually, oh wow, yeah, that's interesting. It's right now at this key level. It's a bit of a weird key level though. It's a bit of a big one, I'd say. Like it's this, or you could say it's this. So then it's way bigger. I'd say it's okay. Let's see. How much time do I have? Oh, I still have some time. I think something like this is the best way to assess it. Is it? I'm not sure. See, with Anchor, I'm not sure. Like there's resistance right here between the 200 EMA and the 382 Fib, between 2 cents or a little bit below that even, and 1.95 cents. If that entire level breaks out, it will probably rally. But the risk is that if you wait for 2 cents to break, then you might be too late. So I'd say breaking above 1.95 cents is already a great bullish confirmation, but Personally, I'll set my price target around 2 cents. I have quite a lot of positions open right now, so might not be the best idea to open another position for me then. Will TRB fall down? Yeah, at some point of time it will. At some point of time TRB will crash. For now, that doesn't seem to be that doesn't seem to be the direction. I mean, TRB. There's not much you can say. I mean, major resistance is $40. It's probably going to test $40 again. If it breaks above that, it's going to rally up to $50. But for now, it's still waiting. It also depends a bit on Bitcoin again. So it's hard to tell. I mean, it's best to stay away from TRB, to be honest. I mean, personally, I'm short right now, just for full transparency. But it might be better to stay away. I mean, the volume and the open interest are still relatively low, so that's perhaps a bit of an indication. And the funding fees are pretty low for TRB right now. That's pretty bearish. So I'd say it's not going to hit new highs, but like I said, it could go both ways. It really could. All right. Let's see. What's up, FB? Lux. Yeah, Lux. It's funny that you say, John, too. I'm actually long on Lux right now. After it broke above this level right here at 0.0565, I took a long. It's not been performing that well, but it still looks okay. I mean, there's a little bit of an uptrend going on here, right? So that's interesting. That's also why I'm long. I'm also long on FitFi. I'm not sure if I said that. I'm short on RSR. That's still struggling a bit, but those are my main positions right now. Yeah, Pino, it's best to stay away from TRB. I mean, I took a trade and I regret it already, even though the funding fees are relatively low. But it's best to stay out. I mean, it is going to crash. It is going to crash hard. TRB. At some point of time. But the question is will that be before or after hitting 54 and 62 and 66? It could go up there first and then it drops down later, right? Is that so? Should you short? No. Why is this not loading? I think the press conference should start any moment now. All right, so what we're going to do is I'm going to turn on the audio for the Federal Reserve press conference, and I'll leave my own audio on. But you'll have to tell me whether the volume is good enough or not, all right? Because right now I'm turning the volume on. There is nothing yet, I believe, that you can hear. I don't think the stream is working already. I'll make myself a little bit smaller so you don't have to look at that the entire stream. I don't think it has started yet, but if it starts, you'll hear sound. Let me know how the sound is. If I need to turn up the sound of Jerome Powell, if I need to turn down my own volume, all is possible. I'll keep an eye on the I'll keep an eye on the chat. But that's it. Yeah, all right, it's starting, guys. Prepare yourself, and in the middle, I will give a little bit of commentary. All right, so that's what I'll do. If he says certain things that will be bullish or bearish for Bitcoin, I'll tell you about it. I'll tell you if I think it's bullish or bearish, and just in general what it means. So that's what we'll do. All right, I don't think there's sound right now. I will make it a bigger screen like this. Is this good? Let me know. I think it is. Maybe it's better if I do this. I'm not hearing anything yet. Hello. Okay, I'm hearing something.
Good afternoon, everyone.
Let me know if you do, and let me know
my
which
colleagues and I
volume
remain
needs
squarely
to
focused
be
on
up or
our
down.
dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not
Let me
work
know if you
for
can hear
anyone.
him.
In particular, without price stability, we will not achieve a
And if you can
sustained
still hear
period
me.
of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we are in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace, and so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates.
So we know this. It's
higher interest
really
rates
about
also appear to be weighing
how
on
they're going
business
to
fixed
change the
investment.
monetary policy according to these
Summary of
economic
Economic
events.
Projections, or SEP,
Just saying.
committee participants
So this
revised
doesn't
up
mean
their
anything
assessments
yet.
of real GDP
It's
growth,
just a summary of the
with the
economic
median
events.
for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%, 4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go.
This is bearish.
The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate.
This is just,
and we're strongly committed to returning inflation to our 2% objective.
So this,
as I noted earlier,
doesn't mean
since
that much.
early last year, we have raised our policy rate by 5.25%.
I think this is going to matter more.
We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of
this
2025.
is this, right?
Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a half percentage point at the end of the next 2 years.
For now.
These projections, of course, are not a committee's decision or
Mixed
plan.
results for now.
If the economy
We see
does
some
not
bullish
evolve as
momentum from
projected, the
Bitcoin,
path
though.
of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective.
This is a bit bearish.
In determining the
not
extent
really.
of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to
Come on now.
keeping longer-term inflation expectations well anchored. It's essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Yeah, nothing. It's just so far. This means
Colby
nothing.
Smith with the Financial Times. What makes the committee inclined to think that the Fed funds
I would
rate
say
at
it's a
this level
bit
is
bearish,
not yet
perhaps,
sufficiently
but
restrictive, especially when officials are forecasting a slightly
The
more
answer to this
benign
could be
inflation outlook
bearish.
for this
We're
year?
seeing some bearish momentum
There's
here.
noted uncertainty about policy lags.
pretty neutral.
Headwinds have emerged from the looming
For
government
now.
shutdown.
I mean, we're
the
seeing
end of federal
Bitcoin fall down
childcare
a bit now.
funding, resumption of student debt payments,
You can see.
things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP,
This
as
is
you,
a bit
as you
bearish.
obviously will have done, you will see that a majority of
Because he's
participants
practically saying that
believe
the
it
interest
is
rates
more
could
likely
go
than
higher,
not
which, to be
that
honest,
we will,
most of us already knew.
for us to raise
But
rates one more time.
reiterating that is a
in
bit
the two
bearish
remaining
because high,
meetings this
high
year.
interest rates are bad. So
Others,
that's also why we're seeing a bit of
believe
a
that
drop
we have
here.
already reached that. So it's something where we're we're not making a decision by deciding
But it's
to,
not really bearish
about
because,
that
like I
question
said, it
by
was already
deciding to just
expected
maintain the
that
rate
the
and
interest
await
rates
further
would go
data.
up more.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, yeah, no. Clearly, we are just, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we
Bearish.
have reached the appropriate level, and you know, we're seeing progress, and we welcome that. But you know, we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve
this is a
what
bit
we're looking to
bearish
achieve,
because
which is progress toward our
He's practically saying that the interest rates perhaps should be high for longer. So that's a bit bearish. But we're not really
Hi, Chair
not
Powell.
really
Rachel
seeing
Siegel from the
much
Washington
reaction.
Post. Thanks for taking our questions. How would you characterize the debate around another hike or holding steady?
We're
Is it
seeing a bit of
discussion
bearish momentum
around
now.
lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah. So the proposal at the meeting was to maintain our current policy stance, and I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some. You saw, I think, 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data come in. We want to see, what we want to see. We want to see that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing a rebalancing of the labor market. So those are the 2 things. Those are our 2 mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced. They want to be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks and make these decisions meeting by meeting.
I see. And in your view, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what would no hike do, if you could sort of game that out for us?
So, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster of where we think that policy stance might be, but we're always going to be learning from data. We've learned all through the course of the last year that actually we needed to go further than we had thought. If you go back.
So this is, just to give a little bit of context, the last 3 or 4 meetings, this was the main thing. This was the main consensus, the main conclusion by Jerome Powell, all right, that they need to wait for more data, and based on that data, they'll make decisions. And so far, it doesn't look like the data we have received is an indication of more interest rate hikes, because it was already expected that the interest rate would hike 1 more this year. All right, so that can be considered bullish, all right, because even though the economic events and the economic numbers and the economy of the US has been doing well, like retail sales are up, unemployment is up, but still initial jobless claims and continuing jobless claims are down. So the economy, the GDP growth is great for the US. So a lot of positive economic news from the US, but the monetary policy actually looks like it's going to be the same, which is 1 more hike somewhere at the end of the year or somewhere in the next 2 meetings, which is what was already expected. So that could be bullish, all right? Because perhaps some people expected more restrictive policy, but we'll learn about that.
Need another 0.5 point of the funds rate on it. Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates, we have to do more with rates, and that's what that meaning is telling you. In terms of,
a bit
of
bearish.
what the neutral rate can be, you know, we know it by its works. We only know it by its works, really. We can't you know, the model.
Oh, well, here we are again. Just you and I.
And that the economy reacts, and again, that's another reason why we're moving carefully now, because you know there are lags here. So it may of course be that the neutral rate has risen. You do see people, you don't see the median moving, but you do see people raising their estimates of the neutral rate, and it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that you know that the neutral rate at this moment is higher than that, and that's part of the explanation for why the economy has been more resilient than expected.
Bit of bearish momentum.
Let's go to Howard.
Howard Schneider with Reuters. Thank you. So you've said several times that
it
the
looks like
economy
that,
needed
Ali.
a period of below-trend growth to get inflation consistently back to 2%. You kind of get that in 2024 a little bit. 1.5% is just a touch below what's the estimate of potential. So the fact that you're getting so much done at so much less cost, does that represent a change in how you think inflation works, a change in how you think the economy works, a change in the mix of supply healing versus demand destruction that's necessary to achieve this?
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment, and that's because we're seeing that rebalancing in other places, in, for example, job openings, and in the jobs worker gap. You're also seeing supply side things, so that's happening. I would say, though, I still think, and I think broadly people still think that there'll have to be some softening in the labor market that can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for that's a way for the labor market to achieve a better balance. So all of those things are happening. You're right. In the median forecast, we don't see a big increase in unemployment. We do see an increase. And but that really is just playing forward the trends that we've been seeing. That is not guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing, is progress without higher unemployment for now.
So just to boil that down for a second, you know, we've gone from a very narrow path to a soft landing to something different. Would
So
you call
far-
the soft landing now a baseline
So far, it's really neutral.
expectation?
We're seeing a bit of bearish momentum, but
No, I would not do that.
Quite
I would
neutral.
just say, what would I say about that? I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible, and you know, I also think you know, this is why we're in a position to move carefully again. That we will restore price stability. We know that we have to do that, and we know the public depends on us doing that. And we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think you know, that's the end we're trying to achieve. I wouldn't want to.
All right. I think it's. I think we're not going to learn anything useful or anything new if we're going to watch 3 more questions. So let's make a conclusion based on what we've heard so far. All right, or at least I'm going to try my best to explain as well as possible what the idea is now. So that's what we'll do. All right. So the main thing is the interest rate stayed the same. All right. The interest rate is still 5.5. The expectation at this point of time is that there will be one more increase, probably up to 5.75 later this year, which is expected. So that's not necessarily bullish or bearish on the short term. Long term, it may be bearish, but there are more factors affecting that. So I would not say that's bullish or bearish. Overall, that was already expected. What we've seen in the last period of time for the US is that their economy is doing well. GDP growth is good, retail sales are good, PMI is good, so in industries are doing well, and there's still low unemployment. That's what we see from the US. What Jerome Powell just said is that for now it looks like the most likely scenario is one more rate increase, and then keeping the rates a little bit higher over the course of the next 1 and 2 years. Depending on the economic results. All right. So next month we'll still have a lot of economic results. Every week we'll have more. So based on that, at the next meeting, they'll make a new decision on what they're going to do. So what does that mean for the price right now? As most of you are probably interested in. For me, it doesn't mean anything. At this moment, it's unclear to me. Some of you might have a clearer opinion. Some of you might have a little bit more of a steady opinion on that. I don't have it currently. After the results of the meeting just now, I don't have a strong opinion on what's next. So what I think the market right now depends on is confirmation. Right now, Bitcoin is between these levels. At the first hand, between at the supports, we have 27,000 all the way down to 26,700. That's our support, all right? And then as our resistance, we have 27,500 all the way up to, you could say 28,000. I'm just going to say 27,700. All right, so that is technically the area which Bitcoin is in right now, I would say. And what we are going to need to wait for is a breakout. All right, when we know that breakout, we know more about the reaction of the market to this whole news and what the market expects. All right, so personally, I am expecting a breakout soon. I'm expecting volatility. A breakout below 26,600 would mean a bearish Bitcoin and probably a drop down to 25,000 again. But on the other hand, if Bitcoin is able to break above 27,700, that means Bitcoin is most likely bullish, even though 28,000 is also still resistance, but most likely bullish. And then there's quite a high likelihood of getting back up to the 29,000. And from there, we'll see. But to me, the meeting and the press conference we just saw was neither very bullish nor very bearish. So that's why we'll have to go with a little bit of a neutral outcome. All right, that's just the best way to see this. I wouldn't, personally, I'm not too biased anymore towards a dump. Perhaps I am a little bit, but it's best to wait for that confirmation, I would say. It really is best to wait for that confirmation. And Satoshi, I'm not from a northern European country. I'm from the Netherlands. But that's it, guys. That's the review of the press conference for now. Perhaps we'll still see some big movements and some big volatility when the whole press conference is over. It is what I expect. I do expect, let's say, before Sunday evening, that one of these levels is going to break out. It depends a bit on the volume. It depends a bit on the other news we'll get. But that's the main thing to wait for, I would say, at this point of time. Until that time, I will be bringing you daily updates on Bitcoin, of course. So you can check those out if you want to know what's going on in the meanwhile. But for now, I want to thank you all for being here. I like the stream. I thought it was good. Hopefully it was valuable to you too. I tried to make it valuable, but I'll leave that up to you. For now, I want to thank you all for watching and being here. I want to wish you all a great evening, great night, or great afternoon if you're from the US. For now, thank you for watching. I'll see you all in my next videos or wherever, Telegram group. I'll see you. But for now, take care and bye.